Hey investors, this is Doug Ehrman, contributor here at Seeking Alpha, talking to you today about the gold and silver markets. With the federal government remaining shut down, gold prices began the week by creeping up. Affecting the price of precious metals probably nearly as much as the government shutdown itself is the fact that the U.S. government is moving ever closer to the debt ceiling, and the two major political parties seem unable to stop bickering and reach a compromise. With the U.S. dollar representing the reserve currency of the world and a default likely to have rippling effects throughout the world, the price of gold and silver has started to tick higher. Monday saw the price of the gold ETF, the GLD, up 1%, the price of the silver ETF, the SLV, up nearly 3%, and miners followed suit as well. Barrick Gold and Newmont Mining were each up 1.4%, and First Majestic Silver was up about 1.6%. Now, while these prices did reverse on Tuesday, trading significantly lower, one thing is clear: volatility is definitely here to stay in the precious metals. So the question for investors is, where will precious metals go from here? Well, with increased volatility and a deal looking to be nowhere in sight, precious metals prices will probably continue to tick higher and higher as we move closer to the level of default. Now, while a compromise, which is likely to be reached at some point and would represent the 80th time that the debt ceiling has been raised since 1960, would probably have a bearish effect on precious metals, the longer the crisis goes on, the higher prices can go. Precious metals, therefore, need to be looked at short term for the time being, and I think in the near term, the pressure that's going to win out is going to be a bullish one. These have become trading vehicles at best, and investors are probably best off either staying on the sidelines, or if you want to take a longer term view, with as much as gold and silver are down for the year, now is not a bad time to establish small positions. As I say, as the debt ceiling comes ever closer, I think precious metal prices will go higher, and certainly if a default does occur, then I would expect gold and silver prices to skyrocket. So in a sense, it's a speculative play, but in the near term, I think the pressure is bullish until some kind of a deal can be reached. Thanks for listening.